Hi, if you want to buy cakes, really good cakes, you'll go to the finest baker in town. Once you are there, you'll be offered with different varieties of cake. Now, based on your likes and dislikes, you'll buy cakes. When you finally get home and taste them each, some cakes you may turn out to be good and some may not. But once you bought and brought it home, both good and bad cakes that comes with you is entirely your responsibility. Just like this, if now you imagine the baker as a stock market, we can call each different flavor of cakes as a different company. So, like any other market, here too, in stock market, there are buyers and sellers. But instead of goods and services, here they come to exchange or trade ownership of companies, or more accurately, part of ownership, or even more precisely, they come to raise and trade equity. For any market to operate, there should be a system in place to make it operational or functional. In its rudimentary or basic form, any market can function without rules and system. But for any market that need to work on a larger scale requires a system and framework. Now let's see how stock market as an ecosystem becomes operational. If you look closer, stock market is a pure relationship between companies and investors. But on a larger scale, when they try to transact, the trust factor between both becomes an invisible line. So as to fill this trust gap, the ecosystem got evolved over the years. Now, in today's world, this ecosystem consists of government, regulator, exchange, investors, companies, brokers, institutions. It has now grown on to be a complex system of its own. But if we look closer, we can see each has a specific set of tasks to do, and when they do that, the whole machinery works and the stock market becomes operational. Now, if we are looking into actions of each in its primitive form in stock market, companies comes with equity, investors come with money, exchange is the place where they meet, brokers help investors connect with exchange, regulator assures all stakeholders work transparently, government act as a catalyst and a policy formulator, financial institutions act as a merchant bank as well as investor. For a retail investor, the participation process looks like this: user, broker, exchange. A retail investor opens an account with a broker through whom he accesses the exchange. Nowadays, these access methods are mostly online and remote. It can be even done from your mobile. This is more or less like a bank account, but functions and purpose are different. The word investor is an inclusive term, so where you stand as an investor defines how you understand the market. For example, this whole session is given on the assumption that you are a retail investor. One of the easiest criteria to place yourself in the market is to assess how much capital you have to start in the market. But for an easier and better understanding, it is good to see investors from the dimension of time. If we view a retail investor on this dimension, they will be categorized to traders, short-term investors, long-term investors. Now, if we again dive deep, a trader is someone who invests and accesses securities continuously throughout the year. A short-term investor usually show a behavior of being invested in securities, time ranging from 3 months to 1 year. If anyone invests for a longer period, that is more than 1 year, he can be called a long-term investor. When it comes to actual market, a single investor can show different traits. That is, in one security he may be a long-term investor, in another a short-term investor, and in some he may even behave as a trading. Now, when an investor finally gets to the market, there again it has different segments. They are present market, futures market. In market terminology, the present market is known as spot market. Futures market is known as futures market. For a basic understanding, think spot market as a place where actual transactions are taking place in real time. And futures market is a place where contracts about actual things are taking place. In more simple way, it's a naive explanation. If you go buy a cake, that is a spot market transaction. If you ordered a cake for an upcoming birthday and then decide to sell the order to another friend today, then it can be called a futures market transaction. In a simple overview, in spot market we get equity, bonds, debts. In futures market we get futures contracts, option contracts. In next section we will explain about these in detail. Stay tuned.